Good morning, wealth builders. Billy Bob here with your Build Wealth Now News Market Update. Today, we're diving deep into the stock that's been powering the AI revolution, NVIDIA Corporation, ticker NVDA. Just a quick backdrop for our newer listeners. NVIDIA started in 1993, pioneering graphics processing units, or GPUs, for gaming. But over the last decade, they've transformed into the backbone of artificial intelligence infrastructure. Their GPUs don't just render video games anymore. They train large language models, accelerate scientific computing, power autonomous vehicles, and now even fuel robotics and digital twins. Their latest product ecosystem includes Blackwell architecture, their current flagship AI chip platform, delivering unprecedented performance for training and inference, NVLink and Spectrum-X, high-speed networking technologies that connect thousands of GPUs into massive AI supercomputers, AI enterprise software, a full-stack platform including NIM microservices, making it easier for enterprises to deploy AI, Omniverse, their platform for 3D design collaboration and simulation, critical for industrial digitalization. And coming later this year, Vera Rubin, the next generation architecture promising 10 times better performance per watt. NVIDIA just reported earnings this week, and the numbers have the market buzzing. To help us unpack what this means for your portfolio, I'm joined by our senior market analyst, Sarah. Sarah, welcome.
Thanks, Billy Bob. Great to be here. And you're right, this earnings report was a masterclass in execution, but the market reaction tells a more nuanced story.
Let's start with the headline numbers. What jumped out at you?
Three things, Billy Bob. First, the beat. NVIDIA reported $68.1 billion in revenue, up 73% year over year, and adjusted EPS of $1.62 versus $1.53 expected. But the real story is where that revenue came from. Data center revenue hit $62.3 billion, over 91% of total sales. This isn't a gaming company anymore. This is the AI infrastructure monopoly. Second, the guidance. They're forecasting $78 billion for Q1, plus or minus 2%. That's well above the approximately $72.6 billion consensus. When you're already at $68 billion and guiding to $78 billion in one quarter, that's momentum. Third, the networking surge. Their networking business, NVLink, Spectrum-X, tripled to nearly $11 billion. This is critical because AI clusters aren't just about raw GPU power. They're about how efficiently you connect thousands of chips. NVIDIA is owning that layer too.
Our viewers include investors who follow Buffett-like principles. They care about cash generation, not just top-line growth. Can you walk us through NVIDIA's free cash flow per share? Where is it trending? And what does it tell us about the stock's true value?
Absolutely, Billy Bob. And this is where NVIDIA gets really interesting for both growth and value-minded investors. Let's start with the headline. NVIDIA generated $34.9 billion in free cash flow in Q4 FY2025 alone, up 125% year over year from $15.5 billion. For the full fiscal year, they produced roughly $96.6 to $97 billion in free cash flow, an all-time record. Now, on a per-share basis, NVIDIA's trailing 12-month free cash flow per share stands at $3.95 as of January 2026. In the most recent quarter alone, that was $1.43 per share. To put that in perspective, just 3 years ago, FCF per share was under 50 cents. That's not just growth. That's exponential cash generation scaling with their AI leadership. And the trend? Over the past 12 months, FCF per share has grown at 38.2% annually. But look at the longer arc, 97% average annual growth over the past 3 years and 66.2% over 5 years. For a company of NVIDIA's size, now a $4.3 trillion market cap, that kind of sustained cash expansion is exceptionally rare.
That's staggering. But Sarah, our audience also watches valuation multiples. At today's price, isn't NVIDIA trading at a premium?
Great question, and this is where discipline matters. Yes, NVIDIA's price to free cash flow ratio sits around 56 times right now. That's above the semiconductor industry median and certainly above what traditional value investors might tolerate. But here's the nuance our momentum-focused listeners should consider. When a company is growing FCF per share at nearly 100% annually, a high multiple can compress very quickly even if the stock price stays flat. Let me illustrate. If NVIDIA maintains just 50% annual FCF per share growth over the next 2 years, that 3.95 TTM FCF per share becomes approximately $8.90. At today's approximately $190 stock price, that would compress the P/FCF multiple from 56 times down to approximately 21 times, well within reasonable territory for a dominant tech franchise. So the valuation question isn't just, is it expensive today? It's, is the growth trajectory sustainable enough to justify the multiple and deliver returns from here?
I love that framing. Now, for listeners who screen using relative strength metrics like RS126 and RS63 crossing the 50% threshold, how does FCF factor into that analysis?
Excellent connection, Billy Bob. Free cash flow is the fuel behind sustainable relative strength. Here's how I think about it. FCF confirms the momentum isn't speculative. NVIDIA isn't growing revenue on borrowed money. They're converting over 50% of revenue into free cash. $97 billion on $68 billion quarterly revenue annualized. That's operational excellence. FCF funds shareholder returns without dilution. In FY 2026, NVIDIA returned $41 billion to shareholders via buybacks and dividends, about 43% of their free cash flow. That supports EPS growth and provides downside support during pullbacks. FCF funds R&D and optionality. Even after returning capital, NVIDIA still has approximately $55 billion in annual FCF to reinvest in Vera Rubin software platforms and new markets. That's how you sustain the innovation cycle that drives relative strength. So for your RS screeners, NVIDIA's FCF trajectory validates the technical breakout. But, and this is critical, if FCF growth were to decelerate while the multiple stays elevated, that's when relative strength can reverse quickly.
So what's the key metric our viewers should watch next quarter to confirm the FCF story remains intact?
3 things, Billy Bob. FCF margin stability. NVIDIA's FCF margin was roughly 51% in Q4, $34.9 billion FCF on $68.1 billion revenue. Watch for any compression from memory cost inflation or higher capex for new fab partnerships. CapEx efficiency. Capital expenditures were approximately $1.3 billion in Q4, remarkably low relative to cash generation. If CapEx spikes without proportional revenue upside, that pressures FCF. Working capital trends. As NVIDIA scales, watch accounts receivable and inventory turns. Any buildup could signal channel saturation or collection delays. For your disciplined portfolio approach, if you're already positioned, these metrics help you decide whether to hold, trim, or add. If you're waiting for an entry, a pullback that holds key support while FCF trends remain strong could offer that higher probability setup you prefer.
NVIDIA sounds like a slam dunk, but yet the stock dip about 5.5% after the report. Weren't investors happy?
The classic buy the rumor, sell the news dynamic. Remember, NVDA is up roughly 55% over the past 12 months. When expectations are sky high, even a great quarter can trigger profit taking. But dig deeper and there are legitimate caution flags the market is weighing. Margin watch. Gross margins held steady at 75%, but management flagged a slight contraction next quarter due to memory cost inflation. In a high multiple stock, even small margin pressures get magnified. China uncertainty. CFO Colette Kress noted that while some H200 chip sales to China received approvals, no revenue has been recognized yet. Regulatory risk remains a wild card. Customer concentration. Roughly half of data center revenue comes from just 4 hyperscalers: Microsoft, Google, Meta, and Amazon. If their AI capex slows, NVIDIA feels it immediately. So the dip isn't about NVIDIA failing, it's about investors asking how much more growth is already priced in.
Great context. Now, Sarah, our Build Wealth Now audience includes many momentum-focused investors who use tools like relative strength screening. How would you frame NVDA for that audience right now?
Excellent question, Billy Bob. From a technical and momentum perspective, NVDA remains in a powerful long-term uptrend, but it's also extended in the short term. For investors who screen for stocks crossing the 50% threshold in RS 126 and RS 63, like many of our listeners do, NVDA has been above those levels for months. That confirms strong relative strength versus the S&P 500. However, given the recent pullback, this could present two strategic opportunities. For existing holders, this dip may be a chance to add on strength if NVDA holds key support levels, say the 50-day moving average, with volume confirmation. For new entries, if you're waiting for a better risk/reward entry, watch for a base building pattern over the next few weeks. A consolidation followed by a breakout on above average volume could signal the next leg up. And fundamentally, the metrics still align with what our audience values: explosive revenue growth, expanding ecosystems, and a massive TAM. Just remember your discipline. Never chase extended names without a clear entry trigger.
Love that. Patience plus preparation. Before we wrap, what's the one catalyst our viewers should watch for in March?
2 words: GTC Conference. Jensen Huang's keynote on March 16th at the GPU Technology Conference. We're watching for updates on Vera Rubin's sampling and customer adoption timelines, new partnerships, especially that potential OpenAI deal Huang mentioned, any color on sovereign AI initiatives, which could open new geographic revenue streams. If NVIDIA uses GTC to showcase the next wave of innovation, not just the current one, that could reignite momentum. But if it's mostly incremental updates, the market might need more time to digest this valuation. Bottom line, NVIDIA's execution is undeniable. But in momentum investing, timing matters as much as thesis. Stay disciplined, watch the RS matrix, and let the price action confirm the story.
Sarah, always insightful. To our Build Wealth Now community, whether you're holding NVDA, watching for an entry, or rotating into other AI ecosystem players, remember, wealth is built on research, discipline, and patience. Folks, hit subscribe, ring the bell, and tell us in the comments where you are in your investment.
Thank you to all our viewers for staying with us. See you all in our next market summary.
Build Wealth Now News is dedicated to research the businesses behind the stock names. Our research are done with artificial intelligence assistance using the best practices in the industry. Please note that investing carries its own risk, and you should do your own research before committing any stock to your own portfolio. This video is done for educational purpose only.